is an SBA loan a good idea?
Yeah, so what you were talking about earlier with the cards being stacked against people, that's really, for the smaller entrepreneur, that's the case. If you go to a regular bank and you're just looking for conventional financing for your business, and it's just based on cash flow of the business, the profitability, most banks aren't really going to touch you until you're doing like $4 million a year of profit. So the question is, how do you get from zero, or wherever you are today, to $4 million a year in profit? Like how do you get there? And so, obviously, most businesses don't actually make it to that $4 million a year of profit number. Plenty of business owners, they build it up to $2-3 million a year of profit. They're happy with it. They take the cash from that, they invest in their properties, they do other things, diversify and grow their wealth. But the whole reason that the SBA was actually created back in the 1950s, like post World War II, was the government recognized that the chips were in fact stacked against the small business owner. And so when they formed the SBA, they did a few things. They put certain initiatives in place to make sure that a certain portion of government contracting dollars would go to either small businesses or veteran-owned small businesses. So that was one of the big initiatives. But also they set up the beginning of what we know today as the 7A and 504 loan programs. And so the way those work, and the reason that they're great for a smaller entrepreneur, is the government, through the SBA, works with thousands of banks across the country who participate in the program, and they guarantee a significant portion of the loan, very much like a government guaranteed mortgage or a student loan, where you have private lenders that are actually doing the loans. They retain a small portion of the risk, but the majority of it is guaranteed by the government. And when you have a government guarantee on 75 to 90% of a loan, obviously the terms on that loan are going to be much better than if you just went to a lender who's going to give it to you, 100% on their risk, because they're going to charge you a much higher interest rate, and the terms are going to be much more restrictive.
Amazing, right?